Something is not liking it. There we go. That's better. Hey, Cata. We're alive.
Yes, yes, finally.
It's still a bit of a struggle with this OBS stuff, but we'll slowly get better, I suppose. How you doing, Cata? It's another Thursday with Ben and Cata.
Hello, everyone. Yeah, I think people, they're gonna start thinking that we are doing this on purpose with the OBS and the technical things at the beginning is like a trigger, you know? Like, okay, what other problems these guys are gonna have this week?
Watch them fumble.
No, it's what really happens. But the good thing is that we are able to fix it fast. So those are we are good at that.
Hopefully, I mean, last time in my live stream on my personal channel, where I was doing the test for the smart money concept, it just completely froze. Like, screen just went off and everything. It's like, okay, maybe we need to buy new stuff, but we have all new stuff, so that's not the case.
By the way, have you add the link in Discord? I don't remember if I've seen that from your live session that you've done when you were practicing the smart money concept. Is that on Discord?
I don't know.
Might be good to add it. I think it's cool. So maybe you can let people know what you're doing with that. So I think it's interesting.
I will. No, I think I did put it in there. Yeah. It's in the discussions. Yeah.
Oh, yeah? Okay. Awesome.
It's there.
So it seems that Ben is so excited about the smart money concept strategy that he takes his time literally to try to experiment that and learn. So what he's doing, he's actually doing live streams now where he is learning and show how his progress basically. And then he has that in Discord, and we have a few people. So that's awesome that are interacting and trying to keep up with all the lessons. And I think that's amazing. If you really want to learn that strategy, by all means.
Yeah. And it's a good one. But today we're going to be talking about what? What's the topic of today?
Spot patterns like a pro.
Okay.
I mean,
so where are the pros? Where are the pros? Are we supposed to be?
Exactly, where are the pros? We're talking about
who's coming? Who else is coming? I know it's just us.
Do we have some? Maybe we should invite some people. I mean, at some point I think it will be interesting to invite some people to our webinar.
If everyone smashes the like button, subscribes, and spreads the word, then we'll have, I don't know, 20,000 followers in no time, which is great for our channel, great for Altrady, great for your software. So make sure to do it. Then we actually might be like big enough to invite some other guests on that have their own YouTube channels, of course. Right now, if they look at us, they're like, you're tiny. I don't want to work with you. No one sees it if I'm on your channel. Our customers see it. And they're very happy. They're very appreciative. We have a very strong following. And they should all be here. So chart patterns today.
Yes. That's the word of the day, at least. So this is what we're going to talk about today, and we try to learn. I'm very excited, as I do want to know more. As I was talking before with Ben, it's something that I really want to understand better. And probably we should start with the beginning and just try to understand what chart patterns are and why are they useful.
Well, let me just explain it like in a very like I'm 5. Chart patterns are just like
Perfect.
someone drawing in your chart, putting a couple of lines that make sense, and then you see the price react to those lines. So you have different types of patterns, and it's always like you draw a few lines, and then all of a sudden the lines make sense, and the price movement makes sense, and then you have a pattern, and you can label that pattern. And then you could make a decision based on that pattern that you see in the chart. That's a chart pattern. So just a few lines drawn on the chart. But let me actually get the chart on the screen. Let's see if that went well. Woohoo! The right button. So here are a few patterns that I've lined out. These are very, very common patterns that you will see a lot in the charts, especially if you've trained your eyes on this. So yeah, you have two different types of patterns really, because if you think about it, the price can only go up or down, right? So once there is an end of a pattern, then at the end of a pattern it can go up or it can go down, and depending on if the price entered on an uptrend and leaves on an uptrend, then it's a continuation pattern, meaning the trend will continue. And as everyone says, trend is your friend, you follow the trend, right? But there's also the possibility that the trend reverses. And then again, you need to follow the trend. But reversal means that the entry is bearish in this case, and then it reverses and goes upwards. So I've explained these in the two different columns, or this is the continuation patterns, and these are the reversal patterns. And they're very, very important in trading in terms of like determining whether you go long or short, or whether you just simply skip the trade. Have you seen these patterns before, Cata?
Yeah, I mean, I've seen sheets when I was trying to, learn a bit more about technical analysis and how to do technical analysis on the chart, and pretty much you see a lot of people talking about these type of patterns. What I found most difficult, and probably it's a matter of time to get used to it, is to actually be able to spot those patterns. So I've seen everybody was showing, for example, what you are saying, and I think it's good at least to have an understanding. However, I do believe the struggle that most of the people have, and I do have that problem, is that it's hard when I'm looking at the chart to start to find those patterns. So yeah, I do know about them. However, I have not used them that much, unfortunately. That's what I can say.
And what about the people watching? Who here has been using chart patterns in their trading decisions? Very curious to hear about that. And also, if you have a favorite one, which one is your favorite? Because I know, like some traders, they really keep it simple and they only just use one type of pattern to trade, right? Like they get so comfortable with it, they just have to open the chart and then they're like, bam, there it is, there it is, there it is, there it is, and for them it just works, right? They keep it simple. They've trained their eyes to be super clear on spotting these patterns, and then they get consistently good at making the right decisions.
Do you have a specific pattern that you are more used to it, or at least that you are using the most?
I have a combination of them, but yeah, we'll just go over the patterns,
okay.
And then I will let you know if I use them. TradingView. Oh, someone's saying TradingView has AI that plots these patterns, but not sure how reliable it is. Yeah. Well, I mean, it will spot them, but will it spot all of them? Maybe not, or most likely not. Will it make mistakes? Of course. So it's good to understand the strategy, or to understand how to use them, to recognize them yourself, and then validate what the AI is doing. So any indicator on the chart, you have to understand what it's doing, right? You can't simply just put on an indicator on the chart, or spot a pattern in the chart, or set a trend line and then not know how that works, how that formed, and what that means in terms of price action, right? Because that is the important parts of these patterns. Understanding. So it's one thing to spot them, it's a second thing to understand them. So AI can help you with spotting them, but understanding them is something that you have to learn yourself. So first up is the ascending triangle, right? So we're in an uptrend. The price touches a limit point, reaches a resistance, a point of resistance, retraces, goes back up, has a higher point on the retracement, and then breaks out, right? And this can happen several times. So right now it has 2 tops, but it can have many tops and many touch points. In the reverse pattern, that's the descending triangle. So the key thing here to see as well is that the top line is roughly horizontal. Right? That's important, because you will see that there are different types of triangles, or they can all be triangles, but the slope of the triangle determines whether or not it will be bullish, bearish, continuation, or reversal. So it's if you think it's easy to spot these, then it's even harder to remember what the actual direction should be. So with the bearish descending triangle, comes in, touches a couple times, goes out, right? And typically for these, you base your entry on when it breaks out. So your entry for this pattern would be somewhere up here. You can wait for confirmation and a retest. So if you're uncomfortable with following the breakout and you don't want it to be a fake out, then you can wait for a retest, and then it bounces off and continues. And the same goes for the bearish one. If you're shorting, then you can open up a short position right when it breaks out, or when it does a retouch, and then a continuation of the drop. The double bottom and a double top, they are reversal patterns, right? So they are kind of similar, and this is why it's important, right? So if you look at this one, then you see this horizontal line, and you have this horizontal line here as well. So you have the horizontal line on the bearish one, and you have the horizontal line on the bullish one, right? And they sort of make a similar pattern. The only difference is that this line is roughly horizontal. Now, it can be a little bit like that, can be a little bit like that, but roughly horizontal, right? So you have the double bottom here, and there is no touch point more, so it will break out immediately. But with this one, you see that it's sloped, right? There's a clear slope. This point is significantly lower than that point. And that determines the difference with, like, this could be the continuation to the downside, or in this case with a double bottom, that it goes up and it reverses. And it's the same for the bearish one. So again, look at the bullish ascending triangle. Because this line is not straight, then we have the bearish one, and it will reverse into a short, where you can take the short again on the breakouts.
Yeah.
Is there now a pattern to be seen on Bitcoin 1 hour or Ethereum? We'll have a look at those in a second, after I've gone through these to explain them, so that we can... You ask it for a friend.
Okay, so sounds good.
Get your finger on the trigger. You might want to enter now. I will let you know if it's long or short, but get your finger on the trigger. Then you have the wedge, and actually, I've put them separate for a reason. But you have 2 types of wedges, right? And that's this one is where the wedge slopes down, and this one's also where the wedge slopes down. Do you see that, Cata?
Oh yes, now that you're saying, yeah, I can see it.
So when you see a wedge that is falling or descending, it doesn't always mean the same thing, because one can be a reversal and one can be a continuation. So what is the big difference? What is the difference between this one and this one?
It's how the market reacts. So basically, the one is like the market goes from up till from down to up, and then the other one goes up, down, pretty much.
Yeah. So the biggest difference is how this wedge was entered, right? So in this case, the wedge entered from the bottom, then it still created that descending or falling wedge pattern, and then it still breaks out continuing to the upside, right? So it just means that it came from the bottom and then it goes there. And the difference here is that it came from the top and it goes down and then it reverses, right? So a good thing to remember is that if you see this falling wedge type thing, then it usually means on the breakout it will go up, right? But if you think it's going to continue, then you might be wrong. Like it's not a given. None of these are 100% accurate. And if you see a pattern like this, then it's going to be like that because, as you could see here, these patterns can look alike, and you only know in hindsight which one it actually was. And in hindsight, everything trading becomes super easy. So yeah, you have to be wary of the direction of the triangle and also the direction of how it entered and how it exits, right? Where it would exit.
Okay.
So you have that with the triple bottom as well. So this is, it has 3 low points. Actually, it came in and then it goes out. But this can have multiple, right? And this one also, this one can only have 3 bottom touches. So touching the support and resistance line at the lowest level, staying in the range, and then breaking out. So when it finally breaks out of the range, then you could look for the long entry. And from what I saw, that Roman said that falling wedges also work well with smart money entries for extra confirmation. Yeah, that's true. So if you get it like a little bit of a breakout where you have a sweep, then you can see that continuation going up. You have the triple top, which is just the inverse of this one. So the price comes in from a long and then reverses after it cannot break this resistance line. So it took all the liquidity at the top right here, and then it pushes down. Now the flag pattern, this one is seen a lot in crypto. And the reason for this one also is because this is a very bullish signal, very bullish. And with crypto, because everything is relatively new, like especially with Bitcoin, like the price of Bitcoin on the very long time frame has been going up. Like we're still like near all-time high right now. So this pattern has been in Bitcoin plenty of times. Otherwise, it wouldn't be this high already. So again, what the difference is between this one and this one is that this is more of like a parallel channel, right? You see the difference? So these are a little bit more parallel. Price moves into a predictable pattern. And as Cata would say, or as Roman would say, there might be a little bit of a sweep here before it goes up. And then you can enter either on the breakout if you're trading this flag pattern, or you could wait for confirmation and then bounce off the resistance line down. Now, this is also like when you ask me which patterns I like to trade a lot, well, this is also very similar to trendline trading, right?
Yeah.
Because this line is a trend line, right? And this is a trend line, right? It's just a matter of adjusting it to that or that, so that you can have 2 types of indications. So right now, we're setting it here for this wedge, but you could have another one for the trend line, and then you can have another confirmation of whether or not we're still in that uptrend, or if it broke even more resistance and the price would go down. So then you get like into the double or triple top situation. Then we have the inverse head and shoulders, which is a bullish reversal one. So the price comes in from the on a downtrend, finds support, goes back up, dips below the previous support. So this is like a nice little liquidity grab, where a lot of people may have seen like this support level and they would put their stop losses right here. Then all their stop losses get hit and the price moves lower, and then it goes up, touches again, and continues to the upside. So this is a very manipulative pattern, especially on the lower time frames. On the daily one, it's you could see it forming quite long time. So for several days, you can see this pattern coming. But also on the head and shoulders. So this is the inverse one. This is the normal one. And the reason why this is a head and shoulders is because you've got two tops for the neck and then one for the head. So that's why they call it a head and shoulders. And the entry for this one would again be on the breakout. So you would either wait for confirmation or you just enter on the breakout, and your stop loss would be right about here. And then you have the flag pattern. Now, flag pattern is also something that I've been using because I've been watching another YouTuber called Crypto Lifer. If you have, actually he's live now. If
Sam.
Yeah, Sam, Crypto Lifer, I love the guy. He's great. He has, I mean, in terms of doing live streams, those are the ones, right? Very high energy. But anything that he does is just looking for the flag pattern, and trying to find that breakout. And that's how he trades. Like he uses these two, basically. That's his whole strategy, right? He can use some indicators. Yeah, Sam the guy. We've got followers of Sam. Yeah, he's great. We love him. But yeah, he solely uses this to trade. So I will show you in the chart later on how he would trade this. It's a very interesting technique. I've tried it. I failed several times, but also succeeded several times. So there's definitely merit to this strategy. Then lastly, you have the falling wedge. So that was the same as the wedge, but it comes in from the top and then it reverses and goes back up. And then you have the rising wedge, which is the same as the wedge right here, but it comes in from the bottom, continues, and then reverses. Right, so these are the patterns. These are a few of the patterns, I should say, because you can have many, many more. Like you have the one that I always remember is a cup and handle, which I didn't include in here, but basically a cup and handle would be something like this, where you have some price going in, big dip, and then, so this is the cup, and this is the handle, and then it's also usually going to the upside. Sammy Cup and Andy, that's what he always says. Yes. I see a cup and handy to the upside. Let's get a little bit of lifer energy in here, guys. Thank you for watching.
Well, I think it's nice to see them, but then I just get back to what I was saying before. I think now for someone that just starts with trading, I think this is overwhelming. And the simplest question that probably everybody has is like, okay, how I can use this? How I can? I understand about it. I understand the idea behind each one of the patterns.
Yeah.
But then how I can identify and basically how I can use them in real life.
Yeah. So, let's first look at what Bitcoin currently has on the 1 hour. So as we're there.
Okay.
So what would Bitcoin have? Is there anything that we could see on this one that would resemble that? On the 1 hour in here, I don't really see it. I don't really.
But you're on the 5 minutes chart?
No, I'm on the 1 hour.
Oh, 1 hour, yeah, correct.
Let's see. No. Well, no. Yeah, I mean, there is something here. We just draw the lines. So if there is anything, then it would actually be that Sam flag, right? So this could be the forming of a flag. So we could see that this one goes down there, there, and then out. So let me actually show you exactly how Sam then does it, because what he does is like, okay, that's nice, but where do you enter? Where do you set your take profits? How high can it go? And actually, what he normally does is he takes the flagpole and he just puts it on where it breaks out. Right. So this is what he would do. And then if we get the trade form in, because this is what we're interested in. So let's say, we have this forming. Then once you, we need to go open, long, reset. So you would enter on the breakout. Now, this is not a confirmed breakout yet, so you wouldn't enter necessarily. And you would set your first take profit at the top of the flag, right? And you would set your second take profit there. And even if you're feeling more ambitious, then you could even use a trailing stop with a third one and squeeze out every little bit possible. Now he normally exits, I believe, if I'm not mistaken, with 70%, but we'll leave some room. So this is a typical setup for Sam, with the stop loss obviously below the last swing low. And then you can see if this is actually a good setup to take. 1.7. So ideally, this is not a great risk reward ratio. So you might have to wait for a better entry in a few hours. So if we can maybe extend this one to here, like that, and we can get our entry right here. So if it moves from there to there to there and then break out, then we could set our entry right here, our stop loss there, and then the take profit would still be the same. So let me just put that fixed price. I don't want it to move. And like that. And then our take profit could be right there. So now what we can do is we can see that this gives us a 3.6 risk reward ratio. So this would be a good trade to take if, like, it breaks out. Because it can also form another part of a pattern where you could see maybe even like a head and shoulders forming. Right, and then it goes down. Do you see the difference? So we're actually in a flag pattern, but there's also maybe a head and shoulders forming. Now it's not an ideal head and shoulders, because the low points are pretty far apart. Like normally the neckline should be straight. Like your neck is on straight, unless you're Quasimodo. The neckline should be roughly straight. Right.
Okay.
So at the moment, it looks like it can break out, and this could be a valid setup. Now you can also use this in combination with a moving average. Now I know that Sam also loves the 200 moving average, which is the blue line, the light blue line right here. And then the price could retouch that, but it's actually already been pretty close. So perhaps what it could do is this could be a false breakout, touch the 200 MA, and then do the breakout. That's very much a possibility in this case. And then for his strategy, you could just put that flag pole wherever you want at the breakout. Some people are a little bit more conservative, where they put it at the support line of the flag pattern. And then your take profit will be a little bit lower, of course, but still 3.3 risk reward ratio. So not bad. This is definitely something that you could do. And if you backtest this and you get good at this and you get 40-50% success rate, maybe even a little bit less if you stay above the 3, then you could definitely have a profitable strategy on your hand, right? And especially in combination with the trade setups that you could do here, where with the smart trading automation, then you can reduce risk. You can reduce risk when it's already broken out. So when you break out, when the price breaks out, it's always like hard to follow the price. But especially with the protection function for the with the stop loss, where you could set it to follow price, for example. So if the price already moves halfway up, then you just make sure that it never turns into a loss trade, right? So this would mean that if the price goes here, then we don't take profit, but we ensure that we don't go into a loss if it continues to go down. Like if it's a false breakout and it moves down. Now, obviously, you should be careful about this, because there is a high chance as well that the price actually breaks out, goes to this line, retouches, because it doesn't go back into the flag pattern, right, and then go up, right? That's a possibility. So you have to be careful with the stop loss to make sure that you give your position room to get to profits before you stop out early. But it's something that with these styles of trading, we really recommend, like if you're starting to learn a new strategy, then we really recommend you to work with a journal. If you already have a strategy that requires you to use risk calculations, risk reward ratios, determining your stop loss entries and all that stuff, if that's part of your strategy already, then we really encourage you to use a journal. Which, if you don't know what a journal is, if you don't know how to do that, if you don't know how to use that, then we've got one set up for you in Discord. If you go to the Smart Money Concept channel, then we have prepared a template for a journal that you could use, and then you can start using that and learn yourself this new strategy. Like if this is something that you're interested in, then definitely try it out. Like use the replay function and try it to see how well this strategy can perform. So let's look
Ben, before going forward, can you show the replay function again? How we can set that up?
Yeah, sure. So let me see if we can actually find something where it's an interesting place to return to. Obviously, it's easy cherry picking right now, because you know exactly what's going to happen.
Yeah, it's just more for people to know how they can use that. And
yeah, I'm just trying to spot an obvious pattern, but
it's not that obvious.
Well, there might be, but yeah. So right here, I see one here. So let's go back here. Right, so you can click on the replay button and then select in the chart where you want to go to for replay. Let me just disable this one. So now what we can see is we can have this pattern and there, and then we entered from the bottom right here. Right, so what's going to happen? Is the price going to go up or is the price going to go down? Well,
let's see.
Well, what do you think? Which pattern is this?
It's that one actually. The symmetrical ascending triangle.
It's the ascending triangle, correct.
Ascending triangle.
Why is it the ascending triangle? Because this line is roughly horizontal, right?
Yeah.
So price is going to go up. Right. So this is what we've decided. This is what we determined, and has a high probability of happening. So let's see what happens. Oh, price breaks out low. There we go. Pop.
Come on. Come on.
Is it going to reach? Let me just put the long position on there. So you would enter on the, in this case, it didn't break out yet. So here, so you would have entered. So this is why replay function is so easy, because you can just adjust it. This is the wrong tool. This one. So here, and then the breakout is below that. So here, and then we would set that there.
Okay.
Yep, there we go. Profit.
Nice. But how did you press something for the replay function to work, or?
Well, I can do it again. So exit replay. We go back to the chart. Basically, you go into the chart. You have two options. You can either click here to do replay,
Okay.
or you can just right click in the chart and say start replay from here, and then you start the replay. So yeah, the pattern is we've identified it here from the lowest point. So this is also with that trend line trading thing. If you haven't seen that, watch the webinar about trend line trading. Very informative. It was our first webinar, so we're a bit rough with the technicals, but nonetheless, the strategy is there. The strategy proves to be good. And then I'm currently doing shift and arrow to the right. There we go.
Boom.
Yeah, and actually it's taken here, right? So this is the time that it would take. If you're waiting for that breakout, if you're waiting for the confirmation, then this might not be the right time. So this might have taken too long for you, and then you might have skipped the trade. But in this case, if you'd entered here, you would still be in the trade, right? But if you had used the stop loss protection function, where for example right here, then you would have been stopped out here, when it could have been a profitable trade, right? Or a full blown trade. Now, obviously, it's super easy. I looked at the chart, and this is how most YouTubers do it, right? When you see their shorts, admittedly, that's also how we create shorts. But you look at the chart and you see how it went, and then you pick your pattern and you say, look, this is how the pattern works. Obviously, if you want to get good at trading this strategy, then you can't do it like this, right? You can't go back into the chart and say, oh, where's the pattern, and where did the price actually move up that way? That's not how it works. If you want to get good at the strategy and you want to actually practice your eyes and do it properly, then you're just going to have to pick a random point in the replay and test it out. So I don't want to remove all the drawings. So that would be like, you just press the replay button and you can actually pick a random bar. So if you really want to go ahead, pick a random bar, click on the random bar, and right now we're somewhere, I don't know when, we're in July 2019, when Bitcoin was still 10,000.
Sweet. Yeah.
So in the long term, Cata, what do you think will happen to the price? Is it a good time to go long at the 10,000 line?
Well,
how much risk would you take?
Now looking back at 2019, I think everybody was like, oh, I don't know what. Now everybody will jump in for sure. I mean, we are all at, I don't know, 100K, and people are still buying. So I think that Bitcoin still has a long road ahead, to be honest.
Yeah.
So definitely.
Yeah, but I mean, again, if we look at it, we can see that same pattern, and this is what I meant earlier. Like, this pattern you would see so often.
Yeah, the flag one. Yeah.
Right, and then you take it there, and then let's see what happens. So this is how you would do it, right? And it might be wrong, right? There might be another pattern coming.
But this is how you are learning, basically.
And this is how you're learning. So this is if we had done it correctly, why this one?
Yeah.
There, so we would have entered there. and then we would have had our stop loss right there, right? And then we would have been stopped out because we're nowhere near our target, right? And then you just continue on, like to see if there's anything we could just hit the play button and just look, see if we can spot something. So yeah, here, what was it in the end, right? Because you had this pattern, right? But what was it in the end? In the end, what pattern is that? I always refer to it as flipping you off, like giving you the middle
triangle.
It's giving you the middle finger. But this is the normal head and shoulders pattern.
Yeah.
Right. So that's the trend reversal, because it came from the bottom, entered in here, goes there. So this is why it's so tricky, right? So you decide based on the current candles that you can see what it is, but at some point those candles are going to form, and they might form a different pattern. So it took out liquidity right here, and it decided to go back down and then do a trend reversal. And I don't know, Roman, would this be a good setup for smart money concept if you're still here watching? But this could be, the grabbing the liquidity from here, going into reversal, then doing this. You see this break of structure right here going down and then moving down. So, but as you can see, this is what we've decided, right? So this is what our strategy needs to work on. So now we went down, and we can start to look for anything. So we in this case we can look for continuation patterns on the bearish side, or we can look for reversal patterns on the bullish side, right? And we're solely looking for the patterns right now. So this could be, yeah, this could. We actually didn't talk about. Well, I mentioned it before, but this could actually be. I need to see where that one is. The curve, yeah. So we have this one there, and then we have this here, like that. So this would be that Sammy cup and handy, right? This could be that, right? But it can also be, so it can be that, but it can also be, if you're, it just depends also like what your eyes see, right? Can also be that, right? Coming from this side. So that's the inverse head and shoulders. So we could see, it could be that cup and handle, or it could be the head and shoulders. But what does it mean in both situations? That the price is likely to go up, right? So we wait for the breakout. So we have to wait for, so let's set the horizontal line here. If we're doing it from the head and shoulders part, then we have to wait for that to happen. And actually, they just go down, right? So no confirmation. We did not have confirmation. We did not have a breakout. So this pattern was not confirmed. Right? This is a good thing to see, that even though this pattern might be forming, if it's not confirmed to be breaking out, then it's not valid, right? And then you just skip the trade. So luckily we didn't place any positions here. So yeah, let's continue looking to see if we can find another pattern. We could see them along the way here, actually, right? So we can see the little, if the price didn't go this quick, then you could have seen them here. And there, like that. Put it a little bit more sharp, like that. And then here, so you could take that trade, but right now it's too fast, so I can't do it anymore, because then I would be lying to myself. Like, I didn't take this trade. I didn't see this pattern yet. So next time, better. So actually, when you're doing this type of trading, right? So when you're doing this type of backtesting, write it down. If you've missed something, you can still write it down. You could write it down as a missed trade, right? So that could mean that next time you need to learn from it better and actually spot it at the time when it happens, so that you could have entered the trade. But if you miss it, that's also an indication of either you need to work on your skills for seeing it, or you need to slow down a little bit and wait for things to happen. So what can we say? Oh, that's going way too fast for me now. What else do we see? It's a lot of consolidation. Yeah. From there, we could say here, there. Now, obviously, the price has broken out.
Yeah.
And went back in. So this is just a fake one. So we wouldn't necessarily enter the trade right here, and then it's the reversal, right? So
yeah, we were expecting something. I mean, always when we have consolidation, something will happen. I mean, it has to go or up or down.
Yeah. So here could be this was the fake out, right? It didn't actually exit. And what can do? Another fake out. Yeah, there's so much manipulation. But in this case, it looks like it's trying to, and this is my famous last words, of course. Not long, short. There. Because these types of wicks, they also tend to be like an indication that at some point they will be taken out again, right? So these very small, very fast spikes, they tend to get followed, especially if the price moves quickly back up. So it's a very long wick, then there's a high chance of that happening. But again, stopped out, right? So this is how you would test yourself and say, okay, well, what did I do wrong here? Right? Is it I entered here, but why did I enter there? It broke out, right? It had several confirmations and it was likely to go down. But in this case, my stop loss was there, and actually would have all the way up. Now, as people can already see that I know the patterns, but I don't trade them often. That I am very, very good at these. I know how to set these up and do this one. I mean, I see one forming here. There. We've got another one here. Like that.
It's crazy, yeah. That's the real market, yeah.
Yeah.
That's how you...
There. Oh, was that I switched. We're now back live. Are we? Yeah, we're live. This is the end. We exited the... Oh, this was the current one that we drew.
Yep.
Yeah. So yeah, I also had a few others prepared on the chart. So I created my watch list and see how they are doing. So earlier I put these one there, and you saw this this wedge, and it broke out confirmation. So there's a high chance that it will continue to go up for a ripple. So this pattern is the ascending triangle, because it's roughly horizontal right here, like that. Entry right here, a nice confirmation. So most likely to go up if you follow this pattern. Like another strategy might tell you something else, but if you follow this strategy and you execute this strategy to perfection, then this would be your entry.
Okay.
Here we have another one, the falling or the bearish flag. Bearish flag again broke out and continued all the way down to a decent level. Like if we put it there, yeah, you see that it hits that price. So that could have been a good trade. And where did I put one here? Or did I remove this one? Yeah, must have removed it. And here's another one that just didn't work out. So these happen, of course, as we've seen in the backtest. So here, this broke out right here, where it would have been expected to go out here. But if we look at it, then yeah, you could see going in like that. But then this is wrong. No, it should have come from the top. Yep. So that's not there. This is just not the strategy, or this is just not confirmed at the top side. So you wouldn't have taken this trade because it broke out at the bottom, right? So it's not a clear. This was not a clear short indication. Only when it broke out here, then it would be like it's invalidated on this bullish pattern, a bullish continuation pattern. And what would the moving average say? Yeah, it's moving towards the 200 moving average in this case. Then what we have here, here we have one that actually did work. So it went down, came in, you have the falling wedge, and it broke out, and it should continue further with a nice take profit level there. So in this case, so how you would set that up is with short, enter it there, take profits are there, and your stop loss would be there. Giving you a nice risk reward ratio of, I don't know, because I don't have any balance. Now, if I want any balance, I can just give myself balance. How is that? Is it worth
awesome?
Anything?
Yeah.
Is it worth anything? Yeah, $50. It's not ready to buy my Lambo yet, but
almost there.
Almost there. But at least you can, if you want to test out shorting on the spot exchange, then this is how you can just do it. So you give yourself some balance, and you can set up this short position and trade it as if you were actually shorting the market on futures exchange, for example, because we don't have futures trading on paper trading. But with this one would be a nice 3.5 risk reward ratio if this take profit is reached. And this is that clear pattern that could potentially do that with the continuation to the downside. Let's have a look at another one.
I like the way you put those markets on your watch list, and then you can easily go and just select them and have a look, So probably if you have different types of markets,
especially if these markets are like not ready yet, like this one is not ready yet to say, because this would be a double top pattern.
Yeah.
But it hasn't reached this bottom level yet, right? So what I could do right now is I could set up a price alert to say, okay, alert me when this price is reached, because then this might be a confirmed double top pattern. And in this case, we might be looking, because this was entry to the from the downside. So this could be still going back down. But we have to wait for that confirmation to happen. So the setting up the price alert will notify you when that actually happens. So this is, especially if you're going through the charts and you spot these patterns, then you can just set them up, hit the save button, and add them to your watch list, and then maybe a couple times a day you check what's actually happening. Here I would have to adjust this one because this one is clearly fake, and this is more like it, right? Because you can see it clearly bounce off there. So with this trend line, you have so many touch points right here that you would say that this is then the actual trend, and this one was just either a gap in the order book, just a quick dump, and you wouldn't necessarily include this then in the chart pattern. But we do have then this one, so let's look at the which one this would be. So this would be the bearish wedge, and so I sometimes also have to look at the namings of these patterns, because you have the flag, bearish flag, bullish flag, wedge, triangle. Like it doesn't really matter as long as you can spot the pattern and you know what the continuation of the pattern is, or if it's a continuation or if it's a reverse one. That's basically the most important thing to know. So in this case, you would wait for a breakout here. Now we can set the price alert right here, right? So that we get notified when the price breaks below this last reversal, last swing. But if you want to enter a little bit more early, if you think like, okay, it's gonna go up there, and you want to, like in this case, you would miss the first initial 1.5%, right? But this is now your trend line. So what you can do is you can actually set up an alert on the trend line. So right now there's an alert on this trend line, meaning that if this trend line is now broken, then we could wait for the confirmation. So then it would be an interesting chart to watch. Using the price alert is fine. Using the trend line alert is better, because in this case it could potentially give you an extra 1.5% space for profit, right? I'm not saying that it could give you 1.5% extra profit, but it gives you the space to get that, right? So in this case, you would wait for that to happen. Then you would set up your take profit, first one there, and then second one. You can look back in the chart for more support and resistance, or you could pick that one and then set your take profit right there. That's a very long way. If it works out, it would be great, but of course it's possible. It'll be wild if it happens. No pun intended.
Yeah, and just to be clear for the people, basically with the trend line alerts, you receive notification every time the price touches the trend line. So just
you could set that. Like you can you can configure that. So if you click on the trend line, you can have different things. So in this case, I can set it to once, which will trigger once. I can set it to once on bar close, meaning that only if the price closes below my trend line will I get the alert. Or I could set it to once per bar, and in this case, then it would notify me every hour that the price is going through the line. So if it had gone through the line already in the hour, I won't get a notification. But if it moves back up in the second hour, then I get the notification again. And then you also have the once per bar close, which means that it only notifies you when the price closes below the trend line. And then if it reverts back the next hour, you will get another notification if it closes back up to that one. So this could be a good one to have right now if you're waiting for confirmation by closing. So it needs to close below this line. Then you can use this one to set that up. And then it will be notified when the price closes below this one. And then once that happens, you can set this up, right? If you want to go to bed, you want to do this setup, and the price is not there yet, but you still have a good feeling about this, then what you could do, you have two options, right? Because we're going to sell below the current price, which logic dictates that that's not possible with a limit order. So we need to do something with a stop limit order. Let me give myself 1,000 here. So right now, if I do this, then my order will be placed immediately, and that's not what I want in this case, right? I want to go to bed, but I want to participate in this trade. I'm willing to give it like my entry right here, so that's okay. But what I can do is I can use a stop limit order if the exchange supports that, and in this case, then I would put my stop below this point, so below this swing. So that I can enter right here. This would work, right? But if the exchange does not support a stop limit, which some exchanges don't, then this is not an option. Or, and that's the other, maybe more important thing, is that this will lock your funds on most exchanges. Some exchanges don't lock the funds, but most exchanges will lock your funds for a stop limit order. And if you don't want to do that because you're going to bed and you might have 2 or 3 of these positions, then what you could do is you could say use the set start position at function. And in this case, if I place it right now, then my sell order will only become active and placed on the exchange once this price level is reached. And this won't lock my funds. So what I can do is I can have 2 or 3 of these positions with, well, more than 100% of my funds for this for this account. Then only the first position that will enter will actually lock your funds and be executed, and the rest will just fail based on not enough funds. So this is a great way to still be trading during the night based on in this case this chart pattern. But for any other strategy that you have, you could also apply this logic, of course. So if you're going to buy, this works for buy and sells, of course. So right now we're selling below the current price. With a limit order, you cannot. It will execute immediately. So you have to use either the start trigger or stop limit. And vice versa, if you want to do it on the breakout, then you would use so let's reset this form, going to the buy side. So right now, if I want to buy on this breakout up here, and my stop loss right there, and my take profit, let's say there, risk reward ratio 3, great, awesome. This is something that I would like to do during the night. Then you could set your position will start at there. You need to give it a little bit of room because if the price shoots up and with the market orders or just very fast price movement, then you could miss your entry. So giving it enough space between the position start and the buy, this just means that you will enter with like a market order, and it will buy as much as it can for the best given price. So this does not mean that you buy only at this price. This means that you will buy from here anywhere in between here, given what the order book is willing to sell you to. So there is no, like, you could set it here and still the price would be here. The only difference is why you would limit it is because if it does happen with a very, very fast movement, then you don't want to buy here, right? You don't want to risk all your profits for that sharp movement. So you just wait until it returns back and does the confirmation and then continue up. Now, the other thing that you might want to do when you're going to bed is then set up the expiration. So if that doesn't happen and this moves to the downside, then in this case we're on the other side. So this, you can set it up because we're using it in reverse. I still need to fix that, by the way, because it should be possible to do that. So next week this will be possible. Then it will cancel out. Normally on the long positions, then you have position will start there like that. This is how it's supposed to work, and then you remove it from your take profit because we're doing this, then this is now reversed. So that's something that we need to fix, and we will do that. But yeah, then you can cancel out the position and not have to worry about getting into a trade that has no profit left anymore.
Well, that's a lot of information, and I'm glad that you actually show the start position at and the expire position at. It's quite useful. I mean, it's a feature that I'm using actually a lot because I don't lock the funds, and the way I'm using it, I have a few markets. Let's say I have 4 or 5 markets max, actually, and I want to make the most out of it. So pretty much I'm placing my trades. And the first one from the 5th that I know that they will do well, or at least this is what I hope. Then it will place, and it's different when you place a trade for 5-10k than $500. So it's quite handy, to be honest. It's a really powerful feature.
Yeah. So I'm actually going to set this up, and we'll see what happens.
Yeah,
I've just given myself 1,000 wild, which is wild, but let's put it there, just a bit there. Is this still a good one? Nah, not so much.
It's 178, yeah.
No, we're really at the bottom. So there, yeah.
It's more, it's 2, yeah.
Yeah. I mean, this is the pitfall of paper trading, right? You just YOLO. You're just like, I don't care. It's not my money. And that's why paper trading is great to learn a strategy, but to become good at a strategy, you're going to have to risk your own money, because then the psychological effect, like what we spoke about last week, comes into play, and then you do different things. You start to make different decisions when there's money in play, and even if you think, oh, I'm just going to trade pennies so that I have that money aspect, if pennies don't mean anything to you, it's the same thing. Like, if you're not going to care about losing $1 or $10 or $100, then that is not the right amount for you to lose. Like, it needs to hurt. That's when you start to get better at a strategy, because then at some point you're going to be like, okay, now I need to watch out, because this is actually hurting me. So paper trading is great to learn the strategy. To perfect the strategy, you're going to have to risk your own money.
Yeah. I think, we covered a lot. I mean, this session, it was really a ton of information, to be honest. I think I have
a lot more also about the trade form, right? So we're finally able to show you how the trade form works, and we even discover that the trade form doesn't always work in the way that I expected. So...
Yeah, but the good thing is that we're gonna be fixed soon. So
it's easy.
It's not. It's what we do. I mean, we make progress and update during the road.
Well, it just shows that I don't normally trade these patterns like that. My trading style is different. I know these patterns. I know how to spot them. I know how they work. But am I good at trading these? By all means, no. I have not traded these. I know. If you ask me, like, okay, how do I get the best entries using the trade form, and what functions do I need to set up? I'm your guy. That's something that I could tell you quite quickly. Like, this is how you would set it up. Whether or not this is the best case scenario, I don't know. If you want to see me struggle with learning a strategy, come watch the Smart Money Concept videos with Roman, because that's where I'm also new to that strategy, but I'm actually invested in learning that one.
And also in Discord, because then they can see also your live streams when you're like learning.
Yeah, exactly. And this, the reason why I don't do these chart patterns myself, basically because I don't have the mentor like I have with Roman now to get me through it. Right? That's it. That's my only reason. Is this tradable? Hell yes. People make serious money with this type of strategy, trading chart patterns only. It's not me. Like, it has to fit. Your strategy has to fit with you. And I'm heavily invested in the Smart Money Concept one right now. But if this is your strategy, then this is how you use Altrady to execute it to perfection. And that's what I want to show in these videos, right? To show you how to use Altrady with your strategy. In these series, we're going to be talking about a lot of different strategies, and again, they're not my strategies. I don't perfect them, but I will show you how to perfectly execute them using the Altrady trading form. That's the most important thing.
Yes. Well, you also provide a lot of valuable information, Ben, aside that. So, yeah, I mean, everyone that wants to check the other webinars that we've done, they will see that. So, yeah, I think it's great to have these types of webinars. And who knows, maybe, yeah, we're going to start changing a bit the format and try to improve it as well. So if you guys have any other, feedback on that, please let us know in the comments.
Yeah, or leave it comments or join us on Discord and do some requests for topics for the next webinars. We'll happily adjust our. Someone says watch for way over an hour, and it feels like a quarter of an hour. Well, it feels to be like that as well.
That's awesome. Yeah. You have a question, Ben. How do you know when to go short or long with the patterns? Is that looking at a trend?
So if you go back to the if you look at these patterns, and you can you can just type into Google, and you will find these patterns quite easily. That's what I did, and well, I knew them already. But so how do you know to go long or short? You look at these patterns. If you've identified any of these patterns, then you look either if it's bullish continuation, so then you go long. If it's bearish continuation, then you go short. If it's a reversal pattern and it's bullish, then it comes down from a short trend and it goes into a long. So the green ones you take longs, the red ones you take shorts. And so you can go back to this video, take a screenshot of this screen. This one. Take a screenshot. We can make a screenshot. We'll post it in Discord, so you can.
Yeah, probably would be a good idea. Yeah.
So there. Go over to Discord.
Screenshot is taken. Was fast. But yeah, we will post it on our Discord as well, so everybody can have access to it together with the video. So, well, I don't know if there are any other questions. I don't know if you want to cover something else, Ben. But yeah, I think we can wrap this up.
Oh yeah, for the trading journal, if you want to do that, then it's right up at the top right here. If you click on that, then you'll get the nice trading journal that you can use for testing purpose. And you can do this for back testing or live trading, of course.
That's awesome. Yeah.
Okay. Well, in that case, we're going to wrap up, and I'm going to wish you a nice evening.
Yeah. Have a good one, everyone. Thanks for being with us. Have a good one. Ciao.
Bye.